Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, November 27th, 2024. It is 10:49 a.m. Eastern Time as I'm starting the video. I had to get one more out before Thanksgiving vacation starts, and once again, I'll be out the following week, all next week, doing my best to post updates when possible, but I'll be on vacation with limited access to internet and computer. Okay, so and again, I do these videos, lay out the levels, whether I'm sitting in front of my desk or not. I would highly recommend that you take note of these levels, duplicate these trend lines. I'm just seeing so much right now in the charts that can go either way, but I think the markets are at a critical point. In fact, I'll probably label this post Black Friday for the stock market or something. Everyone thinks of Black Friday, which just, oh God, if I see another Black Friday ad or get another email. But anyway, they think of it as deals on shopping. Well, depending on what happens over the next couple sessions, the stock market could have a Black Friday. Now, here's the thing. This is, in a nutshell, we're at support. And we're not just at support on one index, in this case, the NASDAQ 100, which we are. But you also have some of the most important stocks, including but not limited to NVIDIA, also right now at key support. And, there's two things to do when a stock or an index falls to support. If you're bullish and you expect a bounce, then you go long the stop somewhat below. If you're bearish and you suspect there'll be little, if any, reaction off there and you're going to get a breakdown, then you wait for that breakdown. So that's the message I wanted to convey. This is the trend line right here, the one off the August 5th lows. We've been dancing on that trend line now. We've had several reactions here and going on, almost the last couple weeks since they faded the Trump pump right there. You had the Trump pump up there that did set up, turned out it did give us that island cluster top. You have a cluster of candles, 1, 2, 3, 4, 5, 6, separated by gaps on both sides. That's a potential reversal pattern as long as you don't exceed the top of it. And it's an easy trading strategy. When you see any type, like this was a bearish engulfing candle, I highlighted that back at the time. I was actually on vacation then as well. If you followed me for a while, I've put in the past, I've highlighted my RP vacation indicator over the years. Costa Rica, I remember a big move there. Maui or Hawaii last couple of years, one of those two. It seems these setups, when I start charting a stock, particularly the market, for a bullish or a bearish setup, it tends to often happen. The breakout comes and the move starts when I'm on vacation. So we'll see if that happens this time again. But that was the bearish engulfing candle, and I made a point to get a fire off a post for you on the bearish engulfing candle that was forming then, sell signals that we had on the very short term, both on NVIDIA and the stock market. We had a little minor trend line there on the 60-minute chart, got us in early, and we swung that thing down with impunity, covered in reverse at the lows the morning of August 5th, and went hard long, and so here we are now. We'll see if we've come full circle. But that's the trend line. Again, it's not hard to replicate. You just need to make sure you have your chart set on a log scaling, aka semi-log. Okay, and otherwise you're going to get a different trend line. And that's now, it's not just the NASDAQ 100, because some traders are watching the S&P, and sometimes you can see one index like the NASDAQ 100 break down, but then at the same point, where it's breaking down, the S&P or another big one's hitting support, and the futures traders and traders in the whole, it doesn't have to be just futures traders, they step in and buy it. So anyways, something to watch for. Let me go over a few other levels and just kind of recap too. I'm going to go to the weekly chart right here. We are still, so far the market has continued to respect this market top range from all the way back, first posted in late June, and so far that's where we are. So now it can go either way, and that's what I'm going to show you in the video. Divergences, as much as they're pretty reliable in indicating impending trend changes. In other words, when you're in a bullish trend and you start getting negative divergences, especially with overbought conditions, it indicates a trend reversal or trend change is likely. They're not timing indicators. That's where the trend lines I just harped on are. Those are timing indicators. So we'll see if that breaks down. And then, but there are plenty of times. I'm going to go through this video and we're going to look at we're just going to focus on tech right now, QQQ and the semis. And I'll keep it relatively short. Just so much I want to point out in the charts because this can go the other way. We can punch through here. Could ultimately take these divergence out or even keep them intact and maybe punch through and make a new high. And then, so, maybe the market goes 5%, 7-8% above where the my market top range was, but you might not want to ride that out if short, depending on if you are short at all. And if you're long, maybe you want to see a breakout above the recent highs, and you certainly would like to, in my opinion, see these divergences get taken out if you are looking for another 20-30% upside in the market, like a lot of the majority of analysts are right now. Okay, so that's it. And if it does play out, and again, I may not be around, one thing I can all but guarantee, what I can tell you from doing this for many, many years, and I often talk about it, stocks tend to fall a lot faster than they rise. There's a weekly chart of QQQ, and as you can see, and this is just, that was a run-of-the-mill correction, 17%. The media called it a crash. I said they probably would. Ahead of time, I said you're going to start to see selling accelerate, and said the risk of a sudden swift downdraft is like, but in my opinion, that wasn't a crash. It was just a pretty, a regular run-of-the-mill correction. It was a 16% drop from high to low. And my point is, you wiped out in 1, 2, 3, 4, 5 weeks, and that was intra-week, so less than 5 weeks because we reversed intra-week. You wiped out, what is that? Pretty much going all the way back here. That's 6.7, almost 7 months of gains. So that's how the stock market works. It goes up most of the time. We all know that. I don't have to tell you, it doesn't take a genius to tell you the vast majority of the time stock market's going up. So as I often say, it's tremendously profitable. Very few can do it successfully, but to short the corrections along the way and not only sidestep. It's one thing to sidestep the gains if you're bullish, maybe your 401k money you got out, you sidestep the bulk of that 16+% drop and then turn around and bought back in and you've just enhanced your gains. Or you can turn around like a swing trader will swing rips and dips, ups and downs. And so again, that's the takeaway here. You can see right here, there was that last drop into 2022. It took us 10.8 months to drop better than 38%. Let me grab the top of that candle, just illustrate this for you. 10.8 months, yeah, 37% drop right there. And that took us back to where the stock market was 1.4 years earlier. So you had a year and a half of gains. And believe me, that's on an explosive rally. That was an unusually strong rally because it was coming off of COVID with all the stimulus there. And of course, we know what happened there back then. 30% drop in a matter of, I think it was like 6 weeks. And again, you wiped out months, if not years of gains during that time. And again, we can go back as far as you want, check all the bear markets and so, okay, so I wanted to impress that point. So just be ready, whether you think the market's going to go down or not, have those levels. And all I can do, and that's what I do, try to do day in, day out, talk about probabilities, not possibilities. Anything's possible, but the probabilities of start of a new wave down and some impulsive selling increases if the levels that I'm covering in this video get taken out. So it's not all about QQQ. But we just hit this trend line. We're down today. Personally, I think we get a little hurrah here. Intraday, I covered right on the lows here right before the video. We're at the lows right now. Let me just say that. I mean, I just covered, here we are, because we're at the trend line there and we're at the trend line on so many other things. This is a 60-minute chart of QQQ right here. I've got different boards, but same thing. You can see it any way you want to look at it. Just look at the lowest trend line, the purple one. That's the same one that I showed you on the daily. And so we're there right now. We're at support. It's a support level that I think has a good shot of going. And that's why I said it could be a Black Friday. Tomorrow, remember, is an abbreviated trading session. Very low volume. It's Thanksgiving. You've got markets close at 1 p.m. And so then you'll have, we'll see what happens on Friday. If we break down, that gives us a potential to have a Black Friday. All right, so that's QQQ. I think I've said enough on it. Well, let me just take a look at SPY. Probably should include that here. Let's see what I have on. There's a trend line on SPY. It's not as well defined. By that, see, we only have two distinct reactions, so it's not even a valid trend line. In my opinion, you need at least three distinct. A cluster doesn't count as a distinct. That's one cluster, one reaction, if you will. And so that's why, again, I'm looking at SPY. And in the component, I'm sorry, QQQ. In the components of QQQ are all that matter. SPY, I always say, is grandma's index. It's full of steady Eddie dividend-paying utility stocks and a ton of healthcare, defensive issue, a lot of financials, which the NASDAQ 100 doesn't even have. And so it's a different, it's a much more broadly diversified index. It's, again, it's, grandma's index. You want to, plug away money, throw some money in something relatively secure for 20 years. Now it's going to go up and down in the same direction as the NASDAQ 100. Just the NASDAQ 100 is going to be that tell, because when tech breaks, and make no mistake about it, tech is also the biggest component by far of the S&P 500. So tech does matter. And I always say just looking at QQQ is like a focused, you're taking a lens, magnifying glass, whatever you want, and you're looking a little closer at the what moves the market, because utilities, they can go to the moon and back, as can basic materials and real estate. Those are some of the lower, the 11 sectors of the S&P 500, but they could do a 300% return in a year, and it won't move the needle because their weighting is so low. 2-3% weighting versus a 25% weighting of tech. All right, let's get away from that. You got that point drilled into you pretty good, that we'll watch the S&P 500, but I'd like to trade the NASDAQ 100. We're going to spend the bulk of this time on the semiconductors, and maybe at the end I'll loop back around to the market leaders, the FANGs. But this is SOXX, the SOXX Semiconductor Index. I've highlighted this one and maintain long-term targets on this, bear market targets, all the way down here to T6. So that will be, if hit, it's going to ultimately be, the sector will be almost chopped in half, about a 45% drop. We've already hit T1. T2 was a trend line that was already been hit. And as I've been highlighting recently, we broke down below it. Back tested the other day, highlighted that as an objective short entry. You either short a breakdown of a trend line or a back test of it, and that's what you had. And so just last 2 days, dropped about 5%. And you can see on the main board I have here, I added a line right here. We've been holding up, the semis have been holding up here right around this about 210-ish level. And if that breaks, especially with conviction, then that should open the door to the next wave of selling. But let's do this. I often say a sector or an index is simply a sum of its parts, and more accurately, most indexes like the S&P 500 or NASDAQ 100 are simply a weighted sum of its parts, because they are cap-weighted indexes, meaning the equal-weighted index are a sum of their parts, but then the cap-weighted indexes like the NASDAQ 100 and S&P, you have to mainly just look at the big holdings, and that'll tell you where the rest are going. All right, we're going to drill through the semis real quick. The king of all right here, NVIDIA, at that trend line. And this is why I said, we're getting very close. I wouldn't have been talking about Black Friday or the risk of a crash 2 weeks ago after the election, because we had that Trump pump. We were up here. We were at zero, and I repeated, zero risk or almost near zero probability of any breakdown or significant technical events, because we were too high up. We were away from the trend line. We were at new highs. So today I'm warning about we could start a impulsive drop tomorrow. Could come Friday. Could come it may not come. Like I said, support is support until unless broken. But that's why I'm doing this video now. I want to do it before I leave town for the holidays, because we're right there. And it's something I said I expect to break sooner than later, and so maybe it happens today. Okay, let me go back to SOXX. We'll go through the, not all of them, but most of the components. Same thing, you look at the big ones, NVIDIA. Again, I can't say enough about this stock. Both the importance of the semiconductor sector, the entire stock market being the largest component of the NASDAQ 100, also being the poster child, all things of AI, and nobody's going to dispute that. So So if NVIDIA breaks down, starts going down, which by the way, it's gone nowhere but pretty much down since earnings, then it tells you then that's a row moment. And now look, again, I'm going to get to some other charts. We have some other stocks that could, semis that are setting up for maybe a potential rally. So I don't want to come across as like this is a done deal or it's a done deal if NVIDIA breaks down. It'll be very technically significant in my opinion. But one thing to watch for too would be a breakdown and then a recovery back below. Maybe you still have the 200-day moving averages as support, depending on what board I go to. This is just a different board. You have price support. You got a lot going on here. But again, I wanted to point that out that we are currently testing. Here's that trend line. Let me move it out a bit. There it is. We are right on the trend line. Again, that's a major, well-defined trend line. Okay, so watch for that. You know what my long-term targets are in NVIDIA. I gave them to you back in June 26 when I gave you the long-term targets on the NASDAQ and everything else. So that's it right there. T4 current target down there. So lot of profit potential if it does break down on this one. And yeah, that's I told you. I suspect it'll break down soon. We'll see. Let's go to the rest of them real quick. Taiwan semi. Remember, the semis peaked. That's what SOXX is telling us. NVIDIA has kind of been an outlier because it's it's best in breed. Everyone knows that, and so it's kind of held up more so than the rest. But you have the same thing you have when the stock market tops. You have poor internals or market breadth, meaning it's only a handful of semiconductor stocks that have been relatively holding the semis. And don't get me wrong, they're down. I showed you SOXX is down quite a bit. And that's the thing here. So you're seeing that divergence. The index itself is down as of today, almost 22%, and yet you have NVIDIA also, not far off all-time highs. That in itself is a red flag. But we'll see. Let me go over the rest of them here. So Taiwan semi put in that divergent high there so far. Breakdown back test. It's just a clean technical analysis right there. There's that August 5th low where so many things hit their key support, price support, and or the 200-day moving averages. Just did both, and we came full circle. Expected a rally there. We got a rally, and boom, back test, breakdown, back test. That's it. Now, the way this works, if and as each additional support level, first one's about 175.90, and then the 200-day moving averages, if and as each of these levels are taken out, those are additional check marks that are going to increase the odds my longer-term targets are going to be hit. For example, on Taiwan Semi, you have an uptrend line right here and really nice support zone right there. So this is my longer term swing target, and just to put it in perspective, that would be about another from where we've already come, but about 40% drop if hit. All right, and there's going to have probably a reaction in this area first. We're not going to go straight there, but it kind of just lays out what may happen to the sector if the charts play out the way they appear that they might. Broadcom. Very, very important big semiconductor stock. Beautiful trend line. Boom, boom, boom. And now boom, we're there. And turn off all the lines. You see the beautiful 200-day moving averages just below. That's I highlighted it here and here on this stock recently as this hitting support where they'd likely step in and buy, and they did both times. That's the August 5th lows. So again, you have intersecting 200-day moving averages and uptrend line support. It doesn't get any better than that. What I mean by that is for a sell signal, if both are clearly taken out. Big red candle through there. Great if you can print a solid daily close. Even better if you can put them in the rearview mirror on the weekly chart, solid weekly close. And then obviously each of the support levels that you can see, aka price targets, if and when they're taken out. Then that opens the door for a deeper move. So again, it's not just NVIDIA at trendline support today. It's QQQ, it's NVIDIA, it's Broadcom. Let's look at a few more. I won't go. And this is what I want to show. There's quite a few semis that are setting up with positive divergence. They put in, they had a big correction. This is why the SOXX is down. You can see here, beautiful wedge right there. This is a well-defined bullish falling wedge pattern with even a shorter term uptrend line there that broke down. We've zigzagged down. It's been a drop off that divergent high of 41%. So maybe that's all it is. That's chopping off almost half the market cap of ASML. That's one of the bigger semis. It's a $270 billion company, and you have positive, aka bullish divergence. So you get lower lows and prices, and that's what I wanted to point out here, guys. So as much as I'm telling you which way I think things are probably going to go, you got to respect it, because if they start rallying and these lower tier stocks start coming back, they could collectively, if enough of them rally, offset any drop in Nvidia. Again, I think it's be a big deal if Nvidia broke down and it wasn't anything more than a brief whipsaw, that gets bought up. But now, in a, when you look at the long-term weekly charts, a lot of these stocks to me have peaked. This is ASML. It's coming down to this long-term uptrend line, coming off a huge divergent high, and I think they're going, quite a bit lower into next year as well. If that's the case, and this is just something I'm going to watch for, then in a bear market, what is common is divergences. Remember, this right here was a divergent low. That's not true. There was a lower low. You had positive divergence. It was in a bear, almost divergent, almost equal lows there. You had a pop, but then the pop got sold into and it continued down. And that's a signature of a bear market or bear trend, where positive divergence doesn't play out, or it plays out for very relatively minor pop. So I'm going to watch this, and what I'm going to tell you now is, remember those check marks I do? Big check marks. If all these stocks that I'm going to show you in this video, I'm not going to make it super long, if the divergences get taken out, meaning we go down and we take out the previous lows and we no longer have positive divergence, it makes the case for a meaningful trend reversal unlikely. Also note, a lot of these, note which ones are below or above their 200-day moving averages. And then on that, I say some of them trade or behave better off the 200s than others. ASML has kind of chopped through it. Here it behaved pretty well, behaved once it broke below. And then when it recovered it, they bought the 200 exponential. They bought them both there, but then it dropped, and it was a downtrend. You could have shorted it. You could have, made 12%, but then they took them back here. Either way, we are below them now. So they're just general guidelines, if you will, that tell you where the trend is, on a stock, if it's above, or the market, if it's above or below the 200-day moving averages. And of course, the stock market's still above for now. Okay, a few more. AMD, I'm going in order like I always do. If you're new to the site, what I do is when I load a ETF on the screen, it'll populate all the holdings of that ETF, and then I sort them by market capitalization. In the indexes, it's market cap weighted, so the top ones are always the largest in the index, not necessarily in semiconductor, not necessarily in ETFs, sector ETFs. But it kind of gives you an idea. They're the bigger companies, so they certainly impact the sector as a whole in the market. AMD, look at this. Beautiful trend line. Boom, boom. It broke, but it's been holding because the market's kind of holding up. It is below it. So what I see, I'll give this a breakdown there, and it back tested for about a week or so, and now the rejection. That's what I like to see after a breakdown. The problem with shorting a backtest is you can continue to backtest for a while. And when you're backtesting an uptrend line, guess what you're doing? Every day that uptrend line comes in at a higher price point because it's upward sloping. So I like to see the rejection there, but now we have this previous reaction low and this reaction low here. So if we can build on this drop a little bit more, that should seal the deal for AMD. That is a breakdown of backtest, so I'm going to stand by that. Maybe it proves to be a whipsaw. I've warned repeatedly, this is a holiday, low volume trading holiday week, so whipsaws are going to be more likely than on a regular week with normal volume. But as I like to say, a breakdown is a breakdown unless it fails. So there's AMD, bearish technical posture. If it can build on these losses today, take out today's lows by quite a bit, it's going to give an additional check mark, if you will. Trend indicator is bearish too, below the zero line, or negative 0.23 is where I have it on the PPO here. And that helps define bullish trends. You want to be long and strong when the when you're above the zero line, and corrections and bear trends occur when the PPO is below the zero line, which we are there. So check that also on these stocks that I'm covering. Texas Instruments, big one as well. Divergent highs, and divergent highs. It's not as if they didn't play out for a drop. That first one there was a drop of 16%. Where did it fall to? To the button, 200-day exponential moving average. They bought it up, ran up, another divergent high, another double-digit drop, ran up. And all these are just simply an extension of the same divergence that started back here. So it's one bigger divergent high, setting the stage for a potentially bigger drop. When does that bigger drop really start to get some traction? Right here. Dual support. I have support about 192.50 and the uptrend line, and even better, you got it, Mr. 200-day simple and 200-day exponential moving averages right there. Confluence of triple support, big level. Just set a price alert below the trend line. When that goes off, check the other semis if they're breaking down as well. You can, in my opinion, get a little more aggressive on a short on SOXX or any of these individual semis, or the market for that matter. Qualcomm. Here's another one. Oh, wait, let me see if Texas Instrument had, no divergence there. Qualcomm does have, or will have, I should say, potential divergence. You can see there's a reaction low right there. That's about 151, give or take. We're almost there now. Any equal or marginal new low anytime soon will be a divergent low. It's also what I call unconfirmed divergence. It's a term I made up because I like to see the crossover, a bullish crossover in the PPO occur to effectively put in a higher low above the previous low. That will confirm what right now is unconfirmed divergence. Then you also want to see that zero line there in the PPO. Again, a beautiful trend indicator, long and strong throughout there. Short bear market, bear trend there all along, and that's kept you, it's been a pretty good guide. It's not don't trade exclusively off any one thing. They're all factors that help support, a case to be long or short a stock, or to have no opinion if there's so much conflicting evidence. I just stand aside. If there's if I can make a bullish or a bearish case. All right, that's it. So, and again, to see for the bearish case, you'd want to see this divergence get taken out, meaning PPO comes on down, and you can see next support is down all the way down here. And again, I'm not spending a lot of time on the weekly charts, but believe you me, I look at them and they factor in, my long-term analysis where I think things are going. Here's the long-term bull market trend line going back to 2023, December in 2023, almost a year ago. I laid out these targets here. That would have been right here, and right here. Yeah, we were coming off here. Oh, there was a bullish falling wedge, breakout right there, positive divergence, rallied up, put in this divergent high. Now we've taken out that trend line. So these are my targets, and this is a trend line I'm calling this back to. So believe it or not, well, let's not say believe it or not. What I'm looking at here is as bearish as that target is, as much as people think I'm probably smoking something, thinking that Qualcomm's going to drop 70%. All that would do is bring it back to its secular bull market uptrend line, and if it rallies off that final target, it's going to keep the bullish trend going. This is a long-term uptrend line, comes off the 2008 lows, and so yeah, it's short-term bearish, but if it holds that level and can rally, that's longer-term bullish. And that's quite a bit of ways away. I just want you to know that I do look at these charts. They very much go into my analysis, but not a lot changes on the weekly chart on a day-to-day basis. And that's why I typically focus on the daily chart. So if we do break down, we start to get some traction, it's going to increase the odds. We're going to go down to my longer-term targets, including this one here. All right, but those are the developments to watch for. Let's see if we can get the breakdown on the things I'm talking about, QQQ, NVIDIA, some of these other ones that are at support, and then For the longer term bearish case, let's see a lot of semis setting up with positive AK bullish divergence right now. And again, it's only potential. But there's another one, AMAT. This is a big chip equipment maker, divergent high, beautiful little breakdown there, secondary breakdown of that trend line, multiple sell signals along the way. Then this primary uptrend line off the October 2022 lows, breakdown back test. I mean, there's been a 101 objective short entries, not 101, but quite a few. And that's been, you would have, and not to mention a big old bearish engulfing candle at the top. You know, I love me some bearish engulfing candles, just like I love bullish engulfing candles at the bottom. And from that bearish engulfing candle high right there, this stock, again, a leading chip equipment maker. What does that tell us about the industry? Forget about NVIDIA. We know NVIDIA has more orders than it can handle now. But NVIDIA is one thing. And by the way, those orders, and I've read, can and will be canceled. They're not, from what I've read, again, I'm not an expert in the industry, but I think they're subject to cancellations, whether there's some fee or not. So all I can tell you is when the tide changes in the sector, typically all ships are lifted with a rising tide, and then all ships fall when the tide's going out. And NVIDIA is obviously one of the last holdouts. But so that's it. A lot of sell signals. But again, this divergence is, you know, is that enough? Again, a divergent high, bearish engulfing candle with topping stick. The stock could turn around and go to new highs now, and that worked. It's not as if that bearish engulfing didn't work. You know, you don't have to, when you have a trend reversal, it doesn't mean you have to go down to the, all the way down to the previous trend. So I'm watching this. I'm watching a stock that's coming up on support with positive divergence. But based on everything collectively, because it does you no good or me personally any good to sit here and say, well, this is bullish and that's bearish and give you a bunch of analysis. You know, at the end of the day, I don't mind eating crow. So I'm going to give you my take on what's going to happen. And that is that, yeah, I can see some of the stocks setting up for potential rally. And if that does happen, that may foil my longer term outlook. But, you know, I'm still maintaining the longer term outlook, which is bearish. And based on that, especially if those longer term targets are hit, there's almost no way that these stocks, at least the majority of these stocks with positive divergence, that it's going to play out for the next leg up. In other words, end this correction that started with that bearish engulfing candle and then the sell signals, and then take us to new highs. Unlikely if my long-term targets on SOXX and NVIDIA and the stock market are going to be hit. But this would certainly, if these do play out, maybe we get a Santa rally or something early next year and these semis start firming up, then yeah, that could play out for new highs in the market. But as of now, let's just look at the facts. Again, we all have our opinion where things are going to go, but I'm going to react. You know, I'm going to look at the facts, and I look at AMAT when it's in a bull trend, it's above the 200s. You want to buy pullbacks once it recovers the 200s, as it did right here. You buy all the pullbacks to the 200s. You keep doing that until it breaks. And when it breaks the 200s, like it did there, you short rallies back to the 200s. And then when it recovers the 200s, like it did here, then you start buying pullbacks to the 200 because you're in a bull trend. Bull trend, bear trend, bull trend, right? Easy stuff. And here, yeah, it's been choppy, a little whippy. Took them out, went through them again, below, back above. But right now, more recently, it looks to me like it's picking a direction here. Last time we went through, now we've had several rejections at the 200 exponential, and we've taken out those recent lows. Again, next step, and a big one would be to see these divergences taken out. And then it's hard to make the case for a rally, especially if you're well below the 200 days, like you were back here and here and here. Then you're in a confirmed downtrend. Okay, a few more and we'll wrap up. Again, I'm just going over the big ones. Micron came off a divergent low and trendline support. I believe I highlighted that one back then as a long trade idea. Of course, it topped here with a big old fat bearish engulfing candle and a divergent high. Then you had an additional sell signal besides the bearish engulfing candle. You had a breakdown of that steep uptrend line wedge. Consolidated for a while. If you missed it, you had plenty of opportunity. Then came the next drop, and there's a great example. When you get these sell signals, once it becomes clear to the masses, many didn't want to believe it here. Some don't see the charts the way I see them maybe. But when we finally had that consolidation after the bearish engulfing candle and then the trend line break, and then we broke below it, the bottom fell out of the stock. And so in a matter of 13 trading sessions, 19 calendar days, this stock fell 33.5%. That's just a great example of what can happen here, and that's why I do these long-winded videos, because we're set up right now with the NASDAQ right on that trendline support, the NVIDIA and quite a few others, Qualcomm. So, and Micron coming up, by the way. They bought the trend line there. That's the primary uptrend line. They bought it again there. Even better, you had a divergent low, so that was a catalyst for that. And then a trend line breakout, bullish falling wedge. Again, I believe that was highlighted. We got a 35% rally out of that. Boom, boom, boom. Couldn't get through 114.53. Got rejected. And now if it can take out the trend line, that's going to be a much more powerful sell signal. Even more powerful, in my opinion, than that sell signal, longer term sell signal. ADI, analog devices. Here's a great example of one whipsaw. We have put in a divergent high, corrected down to the primary uptrend line and the 200-day simple moving average. We had 3 days. They bought the 200-day. They bought it again there, and then it gave up, and it's been whippy. That's what this market's just full of: whipsaws, stop raids, whatever it is. Maybe it was an earnings-induced move. Either way, actually, you know what? That's not even a whipsaw, guys. This is a textbook breakdown. Now that I'm looking at this, there's your uptrend line, breakdown, back test. This candle, see that red candle, means we close the day there. And you know, I always say, if you're trading on the daily time frame, all that matters is how the daily candle closes. So it was an intraday spike above there, only to close back down the day back below the trend line, and so far a rejection. So that one's actually an objective short right here. Again, you got a lot at support now, but you know, the case has already been made to be short the SOXX. It's, you know, it's a short trade out, long-term swing short trade idea, trend short, and this adds to it, especially the failed attempt to try to recover or regain that trend line. And now all you need to do is break those recent lows and start moving away from those 200-day moving averages, and then big support level there, about 200, 201. If that goes, boom, 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 boom. Intel, that was one of my most bullish, bullish on that. We hit there, swung that thing up a couple times. Lam Research, look at that, beautiful bullish falling wedge. So you get the point now, mixed bag. This was a bearish rising wedge, nice clean trend line, nice clean breakdown. It didn't get away from you. Easy to short on the trend line break there. It dropped from the trend line break, it fell 28%. And to this perfect support level right here, that target right there, bounce, 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 broke it, recovered, we're right on there now. So this thing is flirting with really nice support. Let me give you that line. That number is at 71.84, give or take. You always want to look for the recent lows when you punch through a level. That should be the level that does the trick. Keeps getting reject off this downtrend line, but this is a bullish falling wedge pattern. So there it is. So this is what I wanted to. I would be remiss not to show you all these semis that have already been beat down, have positive divergence, and that's a 39% drop so far. So it's kind of do or die time. You have NVIDIA on trendline support. You have a lot of them on trendline support, and those that are already broken down, not on trendline support. Remember, they are below the 200 days, so you have to take these divergences with a grain of salt. But even if you get a pop, it could still be a tradable bounce. Maybe just go back up to the 200s and then ride it up there and then short. That would give you, I don't know, if we went up to the 200 simple and that 86.57 target around there, that's about a 22% pop. But based on my overall analysis, if NVIDIA and the other leaders break down, I think the sector will just crap out. The bottom will fall out of it, and then we could see these divergences taken out. Okay, so I could go on and on and on, but I'm going to end it here. I told you I won't go through each and every component. There's some look better than others, like more meat on the bone on Marvel. Look at that, just needs to break that trend line. Big divergent high, big negative divergence. Targets right here, here. Trend line is the third target right there. So there's your first three targets. If hit, you're talking a drop of about 30% on that one right there. And look at that, coming off of maybe a big double top high right there. Yeah, last time it had a similar technical posture, negative divergence, overbought conditions at this level. Had you threw a short trade on there, let me just move up a little above it and I'll stop a little below. You made about 60 something percent right there. The drop from high to low was about 60, almost 65%. Okay, I'm going to wrap it up here. Told you I'd keep it relatively short, 40 minutes. If anything else stands out today, I'll try to get it out to you, but I've got to start preparing to get ready to leave town here. And like I said, I'll give you guys updates going forward when I can. And of course, if anything big happens, we get the breakdowns and the market's doing some, really hitting hammer down. I mean, you have to have your trading plan. If I can get to the computer or phone, I'll do it. If we rally and explode off these levels or have a false breakdown because it's Thanksgiving week and then snap back up and Nvidia and QQQ all jump back above those trend lines, then react to it. If you went heavy short on the breakdown, then you want to either close that short out or at least I like to usually set staggered stops. I'll tell you what that means. So on QQQ, let's go to this board here. A staggered, so let's just say, for example, you go down here, boom, break down. Then all of a sudden they rally off that level and they come back and they take back, this would just be a back test and that would offer an objective short entry. But anything like this, solid move back above. And at that point, staggered stops would be, you might have one relatively close, especially on a daily close back above the trend line, another there and another there. Again, stops are completely dependent on what you're targeting. If you're looking at just a 60-minute chart and you say, okay, Randy, I see your trend line. I think stops will be hit, longs will sell out, and some shorts will pile in. But I think we're only going to go down here and they're going to buy it up. Then, then you're targeting, let's say to that yellow line, 5% drop. Well, you shouldn't use a 6 or 5% stop loss. That's a 1-to-1 RR. I'll typically go up to about a 2-to-1 RR. And in recent years, I've actually expanded that. I used to prefer about a 3-to-1. Again, depends. Every trade's different. Some I use a much higher, much more favorable RR. Some I will even use a 1-to-1 RR, meaning I'll risk $1 to make $1. Typically on the indexes or other trades, I've learned to move closer to that 2-to-1 RR. And because what I found is it just helps filter out the stop rates. The algos, they know exactly where the stops are placed. And again, if my read on the chart is right, which usually I find more often than not it is, sometimes it just takes a little longer to play out to get there. That way, if your overall success rate's right, more often, if you have a high probability of success, you can use a less favorable RR. But again, it depends on every trade. And very, very much depends on where your price targets are. Again, if you're targeting 5%, you don't use a 5 to 10% stop loss. You use a much tighter stop loss. If you are targeting, keeping the eye on the prize and you're going for these targets down here, which would be if T7 is hit, I've got to grab a little above so I don't move the trend lines. Almost a 50% drop in the NASDAQ. Yeah, you can give yourself a 10% stop loss easy on that trade if that's how you're trading it. And then you have a 5-to-1 RR, which is exceptional. So that would allow for a little pop above there, put in another just larger marginal new divergent high and still keep you in that trade. But again, you have to, have a trading plan. And are you, going for, quick short-term pullback trade? Are you bullish? And if you're bullish, you buy this trend line today with a stop somewhat below. And if it breaks, then you can buy the 200-day moving averages like you did back here. But at some point, you have to have your stop loss, and your stop loss is going to depend on really your price target. How much more upside do you think the stock market has? What are you targeting? All right, I will wrap up here. I'm still talking. This has been Randy Finney with Right Side of the Chart. Happy Thanksgiving to all of you here in the U.S. Or abroad that celebrate the holiday, and to the rest of you, have a great week.